Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepho Modiba, and thanks for joining me. Tonight, I'm joined by Franita Neuville, Advisory and Investment Management and Equity Market Development Lead for Africa at Thomson Reuters. And we're looking at the recently released quarterly investment banking analysis for Sub Saharan Africa region. Thank you for joining me, Franita.
Thanks for having me, Tshepho.
Okay, let's break it down in terms of, I guess, the report. What is the broad focuses on there? I know in terms of M&A activity, it was a decent year last year. What's the overall thesis of the report?
So I think the report showed very positively what happened in the first half of this year. On the continent when it comes to mergers and acquisition activity, investment banking activity, and then also in the equity capital markets and debt capital markets regions. So in all four of those areas, we actually saw an uptick in activity. M&A activity was actually the highest that it's been in, since 2013, in the first half of 2013, which was very encouraging.
Right. Is that really, I guess, continuing the trend that we've seen in 2017 of, call it a risk-taking environment globally, where I guess investors are disregarding what's happened over the last couple of years, and we're starting to see a return to some sort of positivity around Africa and African markets, clearly?
Yes, I mean, just to take a step back, what we saw globally in the same time period is actually mergers and acquisition activity ticking up as well a little bit on a global basis. But interestingly enough, when it came to emerging markets, we actually saw a little bit of a decrease. So South Africa or Sub-Saharan Africa kind of bucked the trend there when you compare it to other emerging markets such as China and Brazil and Russia. Which was again very encouraging for us.
Is that that's a interesting development? Is that a function of really Africa doing something right, or the rest of emerging markets being perceived as a little bit more risky right now?
I think it's more Africa doing more things right. Very encouragingly, we saw the biggest deal in the M&A space come from the US into Mozambique, which was the ExxonMobil deal, who bought 25% stake in ENI, in the LNG project there in Mozambique. So that shows that it's not just other emerging markets looking to invest in emerging markets. There's still a trend where developed markets are looking for interesting areas to put their money in emerging markets. I think also what was encouraging is we saw a 38% increase Sub-Saharan Africa mergers and acquisitions.
Right, that is particularly pleasing. In terms of, I guess, the split for sectors, you mentioned the largest transaction within specifically the oil and gas space. Are we seeing the continuation of that trend of it being more of a commodity play, or is it a little bit more broad-based?
It's a little bit of both. So I think with the exploration and the findings that has been done of the, in the LNG space, specifically on Africa's east coast, we are going to still see a lot of investment going into that space. Commodities will always be an African play. And if you look at the rest of the list of top 10 deals that were done in the M&A space in H1 in Sub-Saharan Africa, there are a couple of materials, and commodities plays that came in there. But we also saw telcos coming through strongly, with Vodacom investing in Vodafone Kenya with that share swap that they did with Vodafone UK. So I think from that perspective, you are seeing a little bit more of a diversification. We also saw some high technology investments coming to the fore, which was quite interesting.
Technology is one that is interesting, and I guess the trend within the continent has been over the last couple of years, and a greater embracement of technology within various sectors. I guess, is that an area that we should be taking a closer look at in terms of M&A activity right now, and I guess going forward?
Definitely, I think so. So I think technology is basically going to drive growth across the continent, or in Sub-Saharan Africa. It's imperative for growth to come to the before. And I think that from our company's perspective, we are very positive about Sub Saharan Africa and the growth that we can see there from the perspective that technology can bring. So, I mean, M-Pesa is a good example, and I know it's been, talked about a lot.
We never tired of talking about it on the show.
But also Emakiba, what we saw recently being launched in Kenya as well, the retail bonds, which is very encouraging to get, the middle class involved in financial markets. One of the things that we've seen is the demographic dividend in Africa coming through, in the telco space, in the banking space, in the retail space, but we haven't really seen it coming to the fore in capital markets and where that can benefit it. And by including the middle class more in capital markets, we'll see a higher demand for African investments, and that will also drive capital markets through enabling IPOs, further offerings, and more people would want to come to the market to raise money.
Interesting point that you touched on a little bit earlier in terms of the source of the capital, a big American transaction, and a little bit of intercontinental M&A. The general theme in terms of, I guess, geopolitics and leaning on the continent has been almost a movement to the left. Or the east rather, where governments are seemingly a lot closer with China and India. Are we seeing that come through in terms of M&A activity, or is it really still in traditional markets where the likes of the US are looking for exposure on the continent?
So it's an interesting one. So China was the third largest contributor from an M&A perspective this first half of this year onto the continent. UK was the second largest.
Interesting.
Yes, so it's a bit of a mixed bag at the moment. So it's difficult to say whether there is a shift because it's only one half of the year.
Sure.
But if you look at that, it certainly seems as if it's coming from a variety of places at the moment. The capital, whether it's coming from traditional markets as well as new avenues such as China.
Which bodes well for the continent itself. In terms of split on where a lot of this M&A activity is focused, is there within the continent a regional focus, or is it really a broad-based allocation of M&A activity?
From an M&A perspective, it was quite broad, but if we looked at some of the other areas like debt capital markets and equity capital markets, it was a little bit of a different story. So on the equity capital markets, we saw a lot of activity in South Africa. So most of the further offerings happened on the JSE. We saw 2 IPOs, which also involved the JSE. So I guess disappointingly, we would have wanted to see more equity capital market activity outside of South Africa.
Right. In terms of equity market activity, that's probably a little bit of a function of, I guess, people follow where liquidity is and following where the big markets are. Is there still a little bit of a change in that dynamic? I know you've spoken about South Africa. Where else has a flow come about from capital markets perspective?
So, as I said, unfortunately not in a lot of other markets, which we would have liked to see, because we think there's lots of potential, especially, and I come back to the middle class, where there are a few governments who are trying to involve the informal sector more in pension funds, which would be great because it means that the pool of money looking for a home on the equity markets or debt markets is just going to increase. But we're not seeing that flow through yet. So, I mean, the bigger markets, obviously Nigeria, Kenya, Mauritius, they're still relatively active. And we would like to see a little bit more companies coming to markets in especially those markets and also the rest of Africa. On the debt side, are we seeing more companies coming to the market looking to raise cash, looking to raise money on debt markets? Yes, unfortunately also not. So most of the issuances came from the African Development Bank, interestingly, in Ivory Coast. And then also we actually saw the Ivory Coast government come to market in a rather big deal, and also Nigeria, the government of Nigeria. The biggest corporate bond that came to market was Stillwater Mining here in South Africa, and again a South African company and not a Sub-Saharan ex-SA company.
Right.
That was the basically the top 10 was comprised of that.
So pretty much on the bond side, we're still remaining seeing the picture of it being government related
100%.
rather than corporate sector. Okay, in terms of spill-off effects, investment banks love M&A activity.
Yes.
Where are we seeing the biggest rewards? Are we seeing any African players starting to benefit from all of this M&A activity, from advisory work or structuring the deals?
Yes, Tshepho. So I think very encouragingly for those banks, we saw an increase in investment banking fees on the continent. It is a big pressure point for them. There's lots of competitors coming to market, and then also investment banking fees are being pressurized down at the moment. If you look at the global trend, we saw a decrease in the first half of the year in investment banking fees. So Africa kind of bucked the trend there as well. When you look at your main banks that have been involved in this first half, it's been your usual suspects, your bigger globals like Citi, Deutsche, Morgan Stanley, but also we saw Standard Bank and RMB in there, of course, and then also Java Capital's name came up. So there are some local players that are getting a piece of the pie.
Right. Okay. Thanks to my guest, Franita Neuville, Advisory and Investment Management and Equity Market Development Lead for Africa at Thomson Reuters. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepho. And send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.